And now it's time for Money Matters. We're talking with Matt Dicken, CEO and founder of Strategic Wealth Designers, about the Fed dropping interest rates for the first time since 2008.
Matt, this is a pretty big deal. What does it mean for investors and really the economy as a whole?
Well, you can look at it as kind of a good or a bad situation depending on what it is you're trying to accomplish. You know, if you have money in savings accounts, CDs, things like that, interest rates going down isn't necessarily a good thing. However, if you're looking to buy a new home or a car or something of that nature, then lower interest rates can actually help out a little bit. But the thing to be a little bit concerned about here is the reason why the Federal Reserve will reduce interest rates is because they're trying to stimulate the economy because they believe it's starting to slow down. So overall, that can be a little bit concerning.
Now, the markets reacted positively, but then went down as the new tariffs were announced on China. Even still, though, the markets had been thinking about what the cut was and what was coming. Do you think that quarter-point cut was enough, or is more expected, is more needed?
Well, I think most people were hoping for a full half a point or 50 basis points, depending on how you want to say that, and doing a quarter point was kind of expected, but some people were hoping for a half point cut. I think a quarter point right now was fine. However, if this trade dispute continues to cause turmoil and volatility in the markets, you may see them go ahead and cut another quarter point later this year.
You know, as we mentioned, this was the first time the Fed has done this since 2008, and we all have tough memories of then, knowing we were going into that very tough recession. Is there a reason right now for investors to look at, any alternatives to the market?
Well, again, the Federal Reserve will cut interest rates because they think the economy is slowing and they're trying to stimulate things. So that could possibly be bad news for the stock market moving forward. So you definitely want to, if you're within 5 or 10 years of retirement, maybe take a look at this as an opportunity to kind of lock in some of the winnings that you've had in your portfolio. Depending on the day, the stock market is still trading around all-time highs. So it's a great time to take some of the winnings off the table, put a little bit of a safety net underneath the portfolio if things continue to get volatile and go the way that we've seen this past week.
All right.
Thank you. Good ideas as always, Matt, and we appreciate you joining us.
You can learn more ways to make your money matter on WKYT.com. And if you have something you want us to discuss, send an email to news@WKYT.com. We'll talk about it here.